give you an insight to the world of the trade boys here inside the trading room and how we help and assist traders every day. You know, what's happening in the market, what to do, where to do it, and how to do this to be successful in the financial market. So let's kind of jump into this. Let's jump in. We've got the chart up here. So we started our day looking at the S&P 500, and this is the daily chart of the S&P 500. Now, this is the chart that I posted on Tuesday, right? And this is Tuesday right here. This is what Trump came out and said, hey, I got COVID. And we nailed the absolute top of the market to the tick, right? To the absolute tick. So say you can't time the markets. Now, this morning, we were right back up into the supply level. So kind of the message to the group this morning was, understand we're opening the markets right in supply. So if you're looking long, be very careful and manage your risk aggressively. Fall from here. Now, if we fall from here, we get a nice distance to fall. We can get all the way back down to 3,300 on the S&P here. Now, if we go the other direction, we break out to the upside, we got to move to the upward direction here. That's pretty good potential right now. We've got some money flowing in right across the board today into the Dow, into the Russell 2000, and so on. So looking pretty good here. So let's jump over. Put the Russell out there. This is the we posted on Tuesday, right? So we didn't reach there on Tuesday, but we did open here today. And again, people say you can't pick the top of the markets. Guess what? Look what I did again. Top of the market posted on Tuesday. We hit there Thursday, and this is where the market stalls. So this is kind of the skill and the educational process we can teach at the Trader Boys is identifying what the market is going to do, where it's going to do it, and knowing what's going to happen in advance is huge for psychology. And psychology is kind of the principle that changes the game between being successful or not in the financial markets. Right, so very, very powerful here. So let's jump over. We've got the NASDAQ here on the futures markets. Right, this was the level we put out there on Tuesday. We hit that to the penny, and we dropped back down into that demand level here. We came off this demand level, and up we go. Right, all the way into the supply level we posted this morning. And the message from in the Trade with the Purpose trading room is this is where the market is going to top. And look at that. That's exactly what it did. So just so you can kind of see that what we're talking about here, this is 928 as the market's opening up. Right, here's the post. Right, so coming through, so you can see in the trading room. Right, there's the Russell 2000 futures right up there, and there's the S&P futures right up there. So those coming in. So the traders in that community know exactly what to do, where to do it. Right. Now let's go through. Let's see the VIX. This is the daily chart on the VIX. You can see the VIX has come right down to this demand level here, where it keeps finding buyers to push back up, and that's exactly what happened today. So this is giving us the indication. So sitting up in the supply level, we didn't see a aggressive move to the upward direction on the VIX, which tells us that institutions aren't heavily protecting portfolios at this point. They have been all week. They've been buying insurance against the portfolios all week here. Today, they didn't really show that they were falling through. So there's no real fear or concern of dropping or falling away from the supply levels at this point in time. Now, we may see a push here tomorrow if the market was to fall away from those supply levels. Now, if the market breaks 30 here on the VIX, that means we're going for one hell of a fall in the market, and it's going to be good. It creates a huge amount of money to be made on the downward direction very, very quickly, and it creates beautiful buying opportunities once the markets hit those demand levels and start to reverse to the upward direction. So there's a great opportunity here if we break that 30 mark on the VIX. So this is something that you should have an alert set for. So you don't need to monitor, don't need to watch it. Let the technology do the work, but set an alert at 30 on the VIX. Goes about that. You know that you should be adding to your short position or getting out of managing long positions here. A couple of stocks that we've been looking at the last couple 2 weeks. First one here is ExxonMobil. ExxonMobil is a long-term play for us here at the Trader Boys. And the reason being, it's paying a 10.1% dividend right now. You think oil is trading in the 40s, just reached back to the 40s today. So oil has a long way to go up over the next couple of years. Right? We do have out of this pandemic and increase the demand on oil, but this is the weekly demand level that we just came down to touch this week. Got a beautiful entry right in here in Exxon, and we had a beautiful inflow of buyers coming into Exxon today. So I've been doing a calendar spread on this transaction. So let's simplify that and look at it from a covered call perspective. Buy the stock, right, and then sell options above the price. So I sold the 35 calls right here Today we are trading above that. So what I would love tomorrow is a fall away from this supply level, coming back off that 20-period moving average, closing around 34.50 would be absolutely perfect. Profit on the stock, and we get to keep the second week of the option premium. So we made 19 last week, which was a 10% return on the position, and we're looking to do 20 cents this week on this transaction from selling of the option contract, bringing a secondary form of income. Right? Every 3 months in the stock, it pays 87 cents per share in dividend. Right? So we're going to get the stock weekly option premium as a second form of income, as well as get the dividend as a third form of income. Now, as we receive these incomes, what we're looking to do is we're going to back, and then once we've got a nice move to the opposite direction, and we've banked that income producing factors from the income from the weekly selling of options as well as the dividend, we're going to use those proceeds to buy a put option long term on this, so you have an insured position. Right? And this is how you should have your retirement portfolio created. You should be buying stocks so you can generate 3 forms of income with insurance on it over time. Right? So now just think, if your portfolio is insured and the market collapses, do you care? No. Right? With the put option, you've got the guaranteed right to be able to sell that stock up until a certain date. Right? At that price, no matter what happens, the stock goes bankrupt, you still get the guaranteed right. So I'm writing an ebook on this particular strategy. So I'm going to be releasing that out there very soon. So keep your eyes out for that ebook on the triple income strategy with insurance for your retirement portfolios. And in Canada, the best accounts to do this in is your TFSA, your tax-free savings account. You can make unlimited amount of money in that tax-free savings account. You can buy the stock, you can sell the call options against it, and you can buy the put options in the TFSA. In your IRAs in the US, phenomenal accounts to be doing this in, because you can make unlimited amount of money and pay zero in taxes on those gains and proceeds over time. So think of it like this: at $30, you pick it up, and a few years later, it's trading at $100 a share. You get a substantial gain. Meanwhile, you've been selling options against it, bringing that income, collecting the dividend on it as well. You've now got a phenomenal portfolio. Now, every time you collect an income on this, once you pay for the insurance, you buy more shares with that income. Right? So now it's not costing you any money to increase your holdings in this. Now, what are we doing? We're compounding. We're compounding your position and compounding returns. Right? Meanwhile, you've still got insurance on the position. So this is a phenomenal strategy. If you're self-directing your portfolio, you don't know this strategy, you need to be reaching out to us or waiting to see when this ebook releases. I've been writing it today. It's give me a couple more weeks, and I'll have that done for you. And we're going to be giving away for a steal, because I believe this is something every investor out there should know, because I believe everybody should be self-directing their portfolio. You should never have your money invested with a broker advisor in mutual funds. Mutual funds are the highest risk investment vehicle you could ever own. And I could go on and on for hours on why that is, but we'll cut it there. Another stock we'll be looking at that's been a phenomenal run for us. It was FOCS. Let's bring that up here for you. So this is FOCS. We are on a 4-hour time frame right now. This has been a great transaction. This is one of our longer-term plays that I posted in the email out there to as an exclusive report. So a lot of people had access to this transaction, but $29.84 was the entry. Stock came in at $28.18. So I had $1.70 of risk, and this is just under heavy accumulation situations right now. We're just blowing right through that supply level, and we just get a nice run on this. We're going to see a little bit of resistance up in this area where we're coming into. Probably get up there tomorrow. This has been a great transaction. It's a longer-term play. Another long-term that we've been focusing in on was TSCO. And this is kind of more of a time of year transaction for this position. You can see massive runner here. Beautiful retracement into the weekly demand level here. And this one here is under heavy accumulation by institutions as well. Now we're running into supply level here, but it shouldn't be too difficult for us to either consolidate and then run through that, just like this one did here. But you can see this up, just sideways. Not enough sellers to even push this thing down, and then up we go. So probably look for that, again, that sideways movement, and then look for the next push to the upward direction on this. But this has also got earnings coming out October 22nd. So this is a common application, common process. Happens a lot of time on good solid companies, is people buy them like crazy as they're coming into earning season. So this is been a great trade and a great run for the group here in Trade with the Pros, the Trading Boys. So quick market update for you. Keep an eye on these supply levels on the S&P futures and NASDAQ futures. You can see right now, this is live in the market. We are about to push through this level here. Right? So that is looking very, very promising. Now, if that takes place, a couple trades for you to look at and monitor tomorrow. I give you an insight to some of these looking at inside the Trade with the Pros room. This is one of them. This is Zoom. This is a big mover and shake, and right now it is in a descending triangle formation here. If you bring this out to 4-hour time frame, I don't know where these trend lines are coming from. This is a huge mover and shaker, and kind of statistically, market has moved up strong. We've come into a pen formation, in this case, a descending triangle. When the market goes up, 70% plus of the time, market breaks out to the upside and continues with a big leg up. So that's a big one there. Another one that you can look at is Lulu. This is a 50 MA play. And these are all different strategies I could teach you, the Trader Boys here. So 50-day moving average on Lulu is what we're looking at here now. It didn't close exactly where I wanted it to. Right? So what we're looking for on this particular play, line right here is your 50-day moving average. And when we have strength in this market, you see here, I rejected off that 50. Right? Now we closed below it. And that's what I didn't want to see in Lulu today, was to close below. Right? Now what is also common that happens on this is don't throw this away just yet. If we gap up and open above that 50 and trade and break through today's high, this thing is gonna run. So there's a run to play for you that we can expect. Heavy accumulation of institutions coming into play once we break through that 50. And it's just on its way. So keep an eye on this one. Another big play, a big tech company. One of the controls of the market is Apple, and Apple is in a pennant. Right, so let's clear some of these lines out of the way. And what you want to be looking at here is this formation taking place right through here. This is Apple, and this is the play on Apple. We're going to come up here. That's your closing price. And it is tight. It's tight. It's right down in that pennant right there. So look for the breakout. Now, we entered down into this, which we got a huge probability we could break to the downside, and we're coming all the way down to 643. And if you've been kind of following the Trader Boys here, you know that I want Apple at 96.43. I've been hunting for this. So there is a good chance that we can get all the way down to that level right there, and that'd be a phenomenal buying point right there. So we'll be on this. Dale Circle Trader Boys, thanks for hanging out, taking the time. And hope you get some great knowledge and learning experience from everything I put out there. Come see us. Come join us. You get a week free at Trade with the Pro. Come check it out. You get the link in the bio. Have a great day.